Load up on guns and bring your friends. Investor Beat starts now. Thanks for watching. I'm Chris Hill, joined in studio by Matt Copenheffer. A little Nirvana to kick the day off, don't you think?
I'm a little thrown off by that intro. I'm not sure if I'm supposed to be scared.
Yeah, just Google that phrase in Nirvana. It's a musical lyric. Come on, people. Come on. Let's start with Facebook. It's the big deal of the day. A $19 billion deal to buy WhatsApp, a messaging app for smartphones. I'll be honest. I'm so old, I've never even heard of this thing until I saw that Facebook was paying $19 billion for it. Is this a smart move, or is this, as some other people say, this is the latest sign of a bubble?
Well, you're in good company. I'd actually never heard of the app either. I think if you're an investor in Facebook, what you're thinking about is that you trust the leadership of Mark Zuckerberg, and you trust the vision of Mark Zuckerberg, and you trust the idea that Facebook has optionality, can branch out in a number of different ways, make money in a lot of different ways. I think looking at this deal, it does look like a crazy overpriced deal, but I don't think it violates either of those two. It could prove bad for Mark Zuckerberg if the deal doesn't work out long term, but I think it improves the optionality, and if you trust Zuckerberg, you should trust him in this deal.
How much of this deal was, yes, we want WhatsApp, we also want to keep it away from Google and Apple?
Well, it might be as much, we just want to get something as much as we want to keep it away from Google and Apple, because we've seen a lot of these startups come along and get these big buyout offers and turn them down. So they just wanted to give a big price maybe and secure it.
You think that was it? They just made a godfather offer because he didn't want to get turned down like he did with Snapchat?
Well, $19 billion is pretty much a godfather offer.
I think you're right. All right, let's get to some of the movers and shakers today. Shares of Pepsi moving ahead of the market after activist investor Nelson Peltz sent a letter to the board of directors urging Pepsi to spin off its snack division as a separate company. We've heard this before. Mm-hmm. Is this just a recycled idea, or is this an idea whose time has finally come?
Well, I don't know. I'm a shareholder of Pepsi, and I've been, speaking of trusting management, I've been trusting management up until now that the combination of the snack foods and the drinks actually makes sense. I'm waning on that idea, and I think it could make sense to split the two apart, to get dedicated management and have the feel of a separate company on both of these. There are different dynamics on both of these businesses, and I think the market might reward a better valuation if it's better able to understand, okay, here's the drinks business, here's the snack business. This is slow growth but high cash. This one's growing a little bit better around the world.
All right, Bank of America, the #1 traded stock on the New York Stock Exchange today. CEO Brian Moynihan just given a raise for his performance in 2013, $14 million in salary and bonus. That's, congrats to Brian. I know he was really struggling there for a while to make ends meet. All kidding aside, is this raise warranted?
You were giving me a hard time about this earlier, but look, one of the things that you got to think about is when you think about the compensation given to any CEO, there's going to be a luck component to a lot of the things that are going on with any company, and then there's going to be sort of a riding the wave component of whatever's going on with the economy, whatever's going on within the industry. But for Brian Moynihan, what's gone on with Bank of America over the past few years, you've seen him deal with all of these legal settlements, and I think he's done a good job with that. A lot of solid cost cutting at Bank of America. I think he's done a good job with that, a good job with the planning and execution, and then also with shoring up confidence. And we look back to the deal that Bank of America struck to get financing from Warren Buffett. That's a good way to shore up confidence. So I think you can point to very specific things that Moynihan has done. So I think he deserves to be compensated more in line with some of the other big bank CEOs.
All right, that's going to do it for today's action. Give me a stock I can put on my watch list.
I'm going back to the well for Facebook. I'm going to be continuing to watch Facebook. I was just browsing through Twitter before we started, and I saw an article tweeted out that we'd heard that Google had offered $10 billion for WhatsApp, and they'd turned that down, and now we see the $19 billion accepted offer at Facebook. So now I'm seeing that perhaps Google offered to outbid Facebook. So I think we're going to see a lot more come to light with this deal. This is a giant deal. This is the largest venture-backed buyout ever. So I think there's a lot more still to learn, and I think that's gonna shed some light on what Facebook is doing here and what investors can expect from it.
All right, for Matt Copenheffer, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.